Welcome to the Transparent FX Academy. I'm Nick, and I'm a top author on TradingView with over 190k reputation points. If you're new to the channel, make sure you subscribe. This is the place to go for high quality, free trading education. Now, without further ado, let's jump straight onto the charts. In today's video, I want to speak about AUDUSD because at the moment we do have quite interesting price action and structure. And as usual, to provide as much education as possible, what I will be doing is first covering the technical side of the market, then we will be speaking about the order flow. And by the end of the video, we will try to understand by combining these two different types of analysis where we have the highest probabilities to see the next potential move. Now, starting here from the monthly time frame, what we can see is that at the moment we have a market which is testing a very strong area of previous monthly support, which is now turned resistance. From here, all this move to the upside was created. We then had the break below the area. At that point, that previous support started acting as resistance here. And as we are testing previous support and resistance, we could expect more potential bearish price action to develop away from this zone. We can also notice how, in general, since we have an impulse and correction, if you want to measure a correction after an impulse, you have to take your Fibonacci from the high to the low of the impulse. And if we do that, we can see how the area that the market is currently rejecting is also lining up perfectly with the zone that is in between the 0.618 and 0.786 of the Fibonacci taken on this monthly impulse, which is a quite strong supply and resistance zone. So we have confluence of resistance inside of this area that we could expect the market to reject lower. Now, if we go down on the weekly time frame, what do we have? Now, from a weekly perspective, we must notice how the market has just tested exactly the previous high and rejected it to the downside as resistance. From here, the market printed the first red candle. Then we went and retested the zone, and at the moment we're rejecting it once again to the downside. So in a situation like this, what we could expect is more potential bearish price action to be developed, essentially for the confirmation of this weekly double top at this zone. Now, going down on the daily time frame, what do we have? Now, from a daily perspective, what we can see is that we did have the creation first of this M pattern here. From here, I made a full breakdown explaining all the reasons for which we could expect this rejection higher, which is exactly what the market did. Then we had the creation of this W. From here, I made another breakdown explaining all the reasons for which we could expect this rejection lower. And again, the market provided us the move. And in the last analysis of AUDUSD that I made, I spoke about it after the creation of this M pattern and explained all the reasons for which we could expect this move to the upside, which made the M pattern complete the neckline, which is in fact exactly what the market did when it touched the neckline here. And by the way, I will link in description all these previous analysis so you can go and check them out for more free education. However, at the moment, what do we have and where we could be looking for the next potential move? Now, before I analyze here the structure that we have on the daily time frame, let's first go and see what we have when it comes to the commitment of traders, which is the COT data, so what the non-commercials and the biggest speculators in the market are doing, which are essentially institutions. Now, if we go and see what we have on the AUD, and keep in mind that all currencies on the spot are traded against the USD, so if you're checking the data for the AUD, you are already checking AUDUSD. What we can see is that with the last few reports, we did see some increasing in the net positions. We reached the low here with minus 51k net positions. Now we're sitting in minus 37k net positions. So we do see a slight increase in the net positioning. However, it is also important to keep in mind that if we look at the broader move, we went from here from having minus 27 to now having minus 37k net positions. So we still didn't recover from what we had here, showing that overall AUD is still pretty weak, so it could easily create some more bearish price action. which is already what we wanted to see by looking at the technical side on the monthly and weekly timeframes. Now here in the daily, this is where things start getting a bit complicated because we know that here, this is the previous low, the market still is respecting it as support. Until the market from a daily closing perspective will remain above this zone, it can easily continue higher. However, if we do get the market to break below the support, if this actually happens, at that point, after the close below the support, all this previous support would become resistance here. So after the break on the retest of this previous support and resistance, this is where we would have very good probabilities for a potential rejection lower, because the best probabilities in the market come when all time frames are showing the same direction. In this situation, monthly and weekly are bearish, daily is still bullish. So only if it breaks below support, at that point it would become bearish as well. So if we do get the break on the retest, how we could be approaching this potential rejection lower. Now, as usual, trading is reactive and not predictive. The monthly, weekly, and daily combined with the COT data, those are the best time frames from a directional perspective. However, when it comes to confirmations and entries, the best time frames are the intraday time frames, so 4 hour and lower. Therefore, what we could be doing is monitoring price action from an intraday perspective during this move to the upside, waiting for the market to shift from an intraday bullish market as we would have to an intraday bearish market. And if the market would shift from an intraday bullish to bearish market and provide to us one of our valid entries, at that point we could be looking for a potential rejection lower for the market to complete this impulse correction and impulse pattern to the downside. Now, if you don't know what I'm speaking about when I say valid entries and these kind of things, that is all part of the mentorship program, which you can find at transparentfxtrading.com. Here you have the possibility to gain access to my entire course with all the rules of the strategies. You also have the possibility to gain access to one-on-one private mentoring, the VIP market breakdowns with the Telegram signals, the COT data software, which is the one that we used in this analysis, the trading station software, which puts together everything that you need as a trader all in one interface. And if you scroll lower here past the testimonials, you will see that at the moment I'm running a special promotion in which you have a huge upfront discount of the mentorship program price from $497 all the way down to $97, one-time payment for lifetime access. And since I have also partnered with the forex broker Blueberry Markets, if you open an account with them from the student dashboard, you can get a full refund credited back into your trading account. And if you scroll lower, you will see that at the moment there is still time to join before the timer goes to zero and the offer expires and price goes back to normal. However, spots are limited, so if they get filled before the timer goes to zero, then the offer will end anyway and price will go back to normal. So I really suggest that you take advantage and join directly from here to gain automatically access with email and password that you will create during the checkout. So definitely looking forward to have you on board. If you enjoyed the video, make sure you smash that like button and comment below. It really does support the creation of more free analysis education and updates for all of you. And I will see you in my next breakdown.